जी.
So very warm good evening to everyone. Myself, CA Kuldeep Sandhu, Secretary, HP branch of ICI. I am highly honored and feel privileged to have been given the opportunity to address everyone on this virtual CPA meeting. I, CA Kuldeep Sandhu, welcome you all to the virtual CPE meeting on global trends in internal audit. Firstly, I would like to thank our dignitaries and experts, CA Charanjot Singh Nandaji, CA Gyan Chandran Mishra ji, our today's faculty, CA Huzefa Unwala ji, CA Ankur Satish Gupta ji, CMA Rajesh Gupta ji, for taking their precious time out for this meeting. Secondly, I would like to thank my virtual audience for being present here today. So before we kickstart our today's session, please allow me to call on the virtual dais CA Navneet Sharma ji, our chairman of HP branch of ICI, for their opening remarks. Navneet ji.
Thank you, Sandhuji. Thank you. First of all, I thank you on behalf of my branch, HP branch of Himachal Pradesh, and myself, that I welcome all of you in this virtual CP meeting organized by the Internal Standard Board of the Institute, in which our branch got the privilege to host this virtual CP meeting, for which I personally thank Nandaji and Gyanchand Mishra ji for providing this opportunity to our branch, the host branch. Thank you, sir. Being the today's virtual meeting is on the global trends in internal audits. Internal audits, as you all know, helps to assure, advise, and anticipate the risks within the organizations, for which we have the learned speakers of the day with us. So I welcome all of you on behalf of myself and on behalf of my branch on this virtual meeting. Thank you, Nandaji, for providing this. Thank you, Sandhuji.
Thank you, Navneet ji. Thank you so much. Thank you. So we have a privilege to have a company of CA Charanjot Singh Nandaji, who is the man of wisdom and one of the most energetic personality of our CA fraternity, which I have ever seen. So CA Charanjot Singh Nandaji is a Central Council member for 25th Council of ICI. Presently, he's a chairman of Internal Audit Standard Board and Digital Accounting and Assurance Board, and also a vice chairman of the Banking, Financial Services and Insurance Committee. He was also the member of Quality Review Board set up by the Government of India. He also represented ICI on a SEBI Committee on Disclosures and Accounting Standards. So there is a long list of Nandaji's of numerous accomplishments. इनके बारे में जितना बोला जाए उतना कम है. So without taking much time, I would like to invite CA Charanjot Singh Nandaji for welcome address and keynote session. Nandaji, please.
Thank you, Sundar. Sandhu Sahab. I am privileged to be here amongst all of you, the chairman, CA Navneet Sharma of Simla branch, the secretary Kuldeep Sandhuji, Mr. Naveen Goyal, the speaker of the day, Hufeza Sahab, Shivani Nigam, Arun Agarwal, Arti from my board. So, ladies and gentlemen, I want to tell you one thing very candidly. The growth of a chartered accountant depends intensely on what study he does, how he hones his technical skills. I see chartered accountant at times feeling that they are short of work. Yes, we are short of work because we always move in the same direction of traditional practice. I'm speaking to a number of members of Shimla branch now because it has been hosted by Shimla branch. I want to tell you, there is a huge scope of doing work on outsourcing, on doing work of internal audit, which is a truly sunrise area of the times. Internal audit, some people think that internal audit may not be their cup of tea. But over the 3 years, I want to tell you, when I joined this council way back in 2004, this is my 6th term in the council, the then President C.S. Sunil Goyal accorded me as the founder chairman of Internal Audit Committee, which ultimately turned into a board. And I have, over the years, I want to tell you, worked on this committee whenever I was in this council. Ladies and gentlemen, your thought process, your hard work will ultimately pave a great future for you. People who want to work hard, because till you do CA, you work hard, you toil the day and night working hard. But the day when you become a chartered accountant, your hard work means a lot. Don't feel that you know a lot. I'm reminded of a couplet which says, तारीफ की चाहत तो नाकाम लोगों की फितरत है, तारीफ की चाहत तो नाकाम लोगों की फितरत है, काबिल लोगों के तो दुश्मन भी कायल होते हैं. We are that class of people who serve this society without any expectations. We are that class of society who have given their entire life. I'm speaking to again 3 gentlemen who are, I'm seeing on the screen, they all belong to Himachal, very difficult place. Driving is so difficult, living is so difficult. In spite of that, they give their best services to membership. They give their best services to the public, client, regulators, government, stakeholders, and ensure that they have the path of success. Let me come to my keynote address. Hold for a second, I will just join on our keynote address. Just a second. So, ladies and gentlemen, the broad theme of today's discussion is global trends and internal audit, a look ahead. And I want to tell you one thing very clearly, very candidly. We have taken themes. The last year theme was technology as an enabler of internal audit. So now we want to bring diverse topics. There are 3 topics for today. Number 1, internal audit trends on non-financial information reporting. Earlier, non-financial information reporting had no relevance. Today, it has become of paramount importance. ECG audit, one of the very important audits, have stepped into to create value and worth for the stakeholders. Second topic is modern topics and trends in internal audit. What are the recent trends? And third topic is continuous audit and risk assessment. So, ladies and gentlemen, I will go ahead with, first of all, I will tell you about the non-financial information reporting. You see, earlier non-financial reporting was included very less in the financial reports. But over the years, pollution, social representation, corporate serving, governance, these things have gone up so high that the importance of non-financial information has assumed very important role in preparation of autonomous and independent non-financial reports. You need to understand that these reports have become more complex and articulate as they need a wide range of information aimed at satisfying the needs of various categories of stakeholders. Very, very important how you see, how you satisfy the needs of various categories. And more importantly, the Companies Act 2013 requires companies to furnish non-financial information mandatory. Again, very, very important. Now, what do you have in non-financial information reporting? First of all, the organization should recognize the responsibilities of creating policies and procedures, which very importantly establish internal controls and accurately reflect the organization's non-financial information. Very, very important. In order to create and protect organization value, non-financial information reporting must be aligned with the priorities of stakeholders, and governing body, management and internal auditor are required to coordinate their efforts. As an internal audit essentially is a management function. So management, the board, the audit committee needs to be sensitized on whatever issue it may be, because at times non-financial issues create a platform, a benchmark for success of the corporations or companies. Now, what are the second topic? Modern trends in internal audit. What are the modern trends? Number 1, organization deeper issues. You have to have a focus on deeper issues. Very, very important. You have to provide value in terms of strategic approach. You are a strategic partner to the board. You have to advise the board how they have to go ahead. You have to create comparative information and trending data. You have so many contemporary competitors. You have to see how they are working and what is their gold coin. So you bring back them to the board. How much or how little information you have. You have to focus on design rather than operational issues. Create a strategic design so that the board can use it. Be the first to crack any important indigenous product which is well appreciated in contemporary times. not to burden audit committee with deluge of information. Only give that information which is required so that they are able to effectively use that information to create value. Open, genuine, and candid interaction. Speak with the management as a stakeholder. Tell them what you perceive and what you see, and let them work on that. Maintain independence of audit and focus on results of audit. Yes, audit has to be independent. Yet, you have to see how audit is benefiting the committee, the audit committee, or the board. Now, internal audit and risk, again, a very great area. See, risk is very, very important, and presently, organizations have wide range of risks, including strategy risk, culture risk, ethics, IT and data security, etc., in addition to their financial risks and controls. So risks have grown manifold. And successful organizations under the guidance of chartered accountants seek to integrate risk management and internal control into all activities through a framework of risk identification, risk assessment, and risk response. You need to understand this thing, that integration of risk management is, I'm sorry, I have a bad throat today. Integration of risk management and internal control is very, very important. The third important thing, risk management is a central part of any organization's risk management. I remember a gentleman calling and saying that, Mr. Nanda, could you advise a business which is having no risk? I told him, sir, any business that does not have any risk means it has no rewards, means it has no opportunities, means it is not worth doing. We have to do calculated risks. Risk appetite is essentially of the board, but we have to take calculated risks to perform. Internal audit, you have to understand, is uniquely positioned within an organization to provide assurance to the board and senior management that the risk management process is effectively working. Very, very important. That effective movement will ultimately put us at a parness where we start understanding how we need to work and to perform. The primary focus of internal audit should be on risk, both opportunities and threats. Risk brings threats, yet it brings so many opportunities. So we have to spend more time on preventing risk identification than detection of control problems. Find out any risk which may come from anywhere, and it is immediately mitigated. As the organization's risk management process mature, internal audit can serve in more of an assurance capacity, telling that risk is at a level which the management knows and it is manageable. In organization where risk management implementation is an initial stage, the role of chartered accountant again becomes very important, because it becomes a catalyst or facilitator to help foster development of organization's risk management process. The entire implementation of risk management has to be under the supervision and guidance of the internal auditor. And further, please understand, as the organization matures, the risk model also becomes mature. And the internal audit at that time, when the risk has totally been managed, the appetite has been totally defined, the internal audit can give the board a realistic picture of how well risks to their strategic benefits are being managed. I'm sorry to say here, but the fact is that risk, even how much it may be managed, it can come from anywhere. And therefore, you need to understand that whatever risk comes at any time, a proper risk control mechanism has to exist, and that needs to mitigate at the same level. So, ladies and gentlemen, I thank you for giving me a patient hearing. And I want to tell you that we are in a very exciting world of understanding how we have to work. We all need to understand this basic fact that our knowledge, our study, our indulgence will ultimately pave a path where we can do wonders. Ladies and gentlemen, one more thing I want to tell you, that all these programs we have done, we do program every Saturday. And every week, every Saturday program is there from 6 to 9. And between the week, every fortnight, we have a program on internal audit standards. So anything of that sort will ultimately lead you to a greater impetus where you understand and have things. I will not speak much. I have Mr. Josefa, who's again a very celebrated speaker on internal audit. But I would like to tell you that in case you want copies, you want to look at the older videos, you can go to our digital learning hub and you'll find a copy of that. In case you don't get something, tell us. In case you want us to hold program on certain new topics, please tell us. We are more than happy to help you. We are more than happy to serve you. As a board, this is my initiative. Thanks for coming in such great numbers. Over to Kuldeep Sandhuji for his further proceeding.
Thank you, CA Charan Joshi Nandaji, for imparting a valuable information. So now let's start with our first session on internal audit, that is internal audit trends on non-financial information reporting. And the speaker of this session is, as CA Nandaji said, CA Josefa Unwala ji. So CA Josefa Unwala ji is a senior partner at the firm and founder of JHS and Associates LLP. Josefa is on the board of Dixon Asia Pacific Private Limited as non-executive director. He served as an expert member on the technology committee of a leading asset management company. He has over 23 years of composite experience in serving international large and mid-sized clients in the area of management consultancy, business advisory, fraud investigations, internal audit, IT advisory, SOX/IFC, implementation assistance, and enterprise-wide risk management. Josefa ji has played leadership roles in his career, mentoring large teams, serving global clients, and developing practice innovations. He has made several notable contributions to professional bodies like ICAI, IIAI, BCAS, ICACA, CII, Indian Audit and Accounts, that is CNAG, IBIN, and other professional forums. Now, I would like to invite you to start with this session. Josefa ji, please.
Thank you, Kuldeep ji. And I would also like to thank the HP chapter for inviting me today. I hope my voice is audible. In particular, Nandaji, Sharmaji, Goyalji, and everybody on the dais today. Thank you for giving me this opportunity. I always enjoy speaking along with Nandaji. There is so much of enrichment that one gets from his seminal thoughts. So the topic for the day is to take you through the global trends on non-financial information reporting and also what the internal auditor's role is in this specific aspect and what processes in terms of what internal auditors can do, where we can add value in the domain of non-financial information reporting. So what I will do is that I've prepared about 29-30 slides. I will take you through those slides and they are bucketed into various components. The first is to kind of give you a little bit of an orientation on the current trends globally as well as in India in the space of NFIR, which is non-financial information reporting, followed by what is a framework that the internal auditors can look at, how we can add value, what are the various risks, what are the various types of frauds happening in this space, what are certain regulatory prescriptions that are emerging in this space, followed by a few practical illustrations coming out of data analytics and internal audit exercises in the area of NFIR, and we'll end with whatever questions you may have. So let me share my screen with all of you. I hope the slides are visible. They have come up on the screen. Okay, great. So as I mentioned to you that first we will go to the stakeholder expectations, then the scope and boundaries of NFIR, framework for IA activities in NFIR, and end with some illustrative examples of where internal auditors can add value. So let's look at the trends in non-financial information reporting globally. What are the drivers? What are the trends? Why the concept of non-financial information reporting has caught up and is so much prevalent nowadays, and where it adds so much meaning to the annual reports of the organizations. So what has happened is that over the years, investors, shareholders, stakeholders, etc., had got used to the concept of financial reporting in the last 3 to 4 decades, since the advent of listing of corporates started in the US and then across the globe. The balance sheet and profit and loss was predominantly the dominant tool for investor, shareholder, stakeholder to decide the quality of management, the quality of performance, the output that the organization gave to the stakeholders and to the society. But there are 3 or 4 things that have happened in the last decade, which has shaken the confidence of investors as far as financial reporting is concerned. One is the limitation of financial reporting from a perspective of capturing environmental concerns, climate change concerns, governance related issues. So the investors and the investment community believe that the decision making has to be expanded over and above the financial statements from a historical balance sheet and profit and loss account to move into more real-time key performance indicators, capturing a metrics that goes beyond the financial statements into the ESG framework, which is environment, social and governance framework, which got fancy, primarily driven through climatic conditions and what we are witnessing today across the globe in terms of the impact of climate change. Second is in terms of the trend on fraudulent financial reporting. There has been series of large scams and scandals that have rocked the globe as well as the Indian financial system. And every year or two, there are large names that tumble in terms of liquidations and in terms of restructuring, etc. Primarily the root cause being that the financial statements and the books of accounts have been cooked up by the management. So that has reduced the reliability of financial statements. The confidence of investors has gone down as far as financial reporting is concerned, and they are looking at avenues. They are looking to broad base the decision making, diversify the risk of decision making beyond the books of accounts and financial statements, and the performance metrics has enlarged or has expanded and is gradually shifting beyond the books of accounts and the balance sheet and profit and loss account to stakeholder capitalism that is now comprising of feedback and insights on local communities where the corporates are working or where CSR work is being done, employees, customers, business partners, and the environment. So the performance metrics has shifted from balance sheet to all these other stakeholders where now there is a large bucket of information on employees, customers, business partners, environment, sustainable sourcing, etc. that comes out in the annual financial disclosures, business responsibility disclosures as recommended by SEBI for the top 100 companies, CSR disclosures as recommended by the Companies Act and so forth. Also, the investment and the stakeholder community at large believe that technology, which is driving the transformation of businesses and business models, and the latent innovation arising on account of technological developments, adoptions, are not being captured by financial statements adequately. So they are again looking at expanding the key performance indicator framework, also the performance arising out of continuous innovation that is taking place in the business models of the companies and corporates, and recognizing the intangible assets arising out of that. So you would have noticed a trend recently that has hit India as well, our shores as well, that a lot of loss-making startups are being listed on the stock exchange, primarily on the strength of their innovation in the business model, the IPR in the balance sheet. So all these trends, mega trends, have led to a shift in the performance metrics beyond the financial reporting. So that moves into the domain of non-financial information reporting. This slide is on the lighter side. In the past, we had seasons. Now we only have climate change events. We no more have a spring, summer, autumn, winter, etc. What we have is floods, droughts, catastrophe, and very different kind of climatic conditions. And if the climate were a bank, I suppose at a global level, there would have been a savior immediately. It would have been saved. Unfortunately, we don't have a climate as a bank, but we have a very vibrant audit community globally who can look at risk and controls in the green light. Perhaps we just need to change the lens of our internal audit approach from red lighting to the audit committee, generating red flags, to green lighting. What are the internal controls that need to be transformed, changed, so that the organization and company can now comply with the various new emerging ESG, NFI norms and expectations of the stakeholders. Let's look at this mega trend in action. I have just created a snapshot from Hindustan Unilever's annual report of last year, of March 21, just to showcase to you that how the report demonstrates the value creation process of HUL in terms of the business model. Now, interestingly, historically, whenever a corporate wanted to demonstrate the value creation process, what they would come up with is the numbers of their balance sheet, their net worth, the profit increase, the return on investment, and so forth. But however, here, when you look at the business model picture of HUL, you will not find those indicators at all. So the company is moving beyond the traditional profit metrics to now getting into the sustainability metrics, talking about consumer insights, innovation, consumer use, sales, marketing networks, sourcing, manufacturing, logistics, relationships, resources that are being consumed, etc. So the alignment is more to the sustainable development goals, moving towards the global agenda of climate change and sustainable development. So increasingly, you will see the trend where the annual reports are now changing from the traditional metrics to showcase to the stakeholders what the companies are actually doing in the non-financial information reporting domain and how they are generating value for their stakeholders. So we as auditors would be missing out in action if we are not able to provide suitable assurance to the board and to the audit committee that so much of non-financial information reporting that is taking place, whether that is reliable in the first place, that is consistent with the previous period disclosures, that is comparable, that is communicating the right messages with honesty, it complies with the laws of the land. Annual report is just one example. There are other examples of advertisement campaigns released by large corporates. And fortunately, just as we speak, India has also passed a regulation around advertisements. And would you believe it? Now the superstars and the film stars and the film personalities will have to do a conflict disclosure on material information when they participate in any advertisement campaign for a large corporate. So India is quickly moving towards adopting a lot of global best practices as far as NFI is concerned, and we as internal audit fraternity cannot be left behind. We'll discuss more examples about it as we go ahead on the slides. Now, what are the top 10 drivers that are actually leading us towards this mega trend in action in terms of moving towards non-financial information disclosures? It's important for us to understand these drivers, and so that we can then dovetail our approach and create an internal audit universe around these drivers and what's happening in the organization around these drivers. So the first is the disclosure related to the ethics code of conduct of an organization. Second is the governance mechanisms, including fair practices code, the board constitutions, including whistleblower related issues, vigilance related issues in the organizations, then the climate change related issues. There are some examples on the right side of the screen, again extracted from the HUL report, where you will see that how they are reporting on a year-on-year basis in terms of the water consumption pattern of the company and how the carbon footprint of the company is being reduced. What are the goals there? What are the goals to reduce the water consumption cycles? What are the goals to reduce the wastage that is being generated by the manufacturing plants and units on a year-on-year basis? So all these statistics are creating value for the organization, and the internal auditor, while framing the scope of work with the management and the audit committee, can also have a component on non-financial information reporting to provide assurance that all this information, and there are countless data and bytes that are there on NFIR. We'll try to classify them into various components as we go ahead in our discussions. Next is information about employees. Here again, COVID has accentuated the non-financial information disclosures in terms of key person dependencies, succession plans in the organization, health of the employees, so much so that the regulator also now wants to know material events as far as key employees are concerned in the organization from a continuity perspective. Then, of course, about customers, distribution, channels, segments, etc. IPR and innovation that is taking place in the company. Intangibles such as reputation, the brand, quality of products, services, viability of the business model, risk and opportunities, and of course, corporate social responsibility. So these are the top 10 key drivers which the internal auditors can consider in terms of giving assurance to the audit committee and the various stakeholders. And as IBM has put it very nicely, financial indicators are no longer enough. Those organizations at the leading edge are using non-financial metrics to great effect to generate and create value for themselves. Now, is this just a trend? Because there are a lot of mega trends that come and then disappear over a period of time. I personally believe that this trend is here to stay. When you look at these metrics on risk, reputation, and returns, on all the three pillars, any non-financial information reporting over the years has reduced the cost of capital for the company. So you will definitely see a differentiated rate of cost of capital, where companies are complying with ESG norms, companies are complying with climate change norms, the cost of borrowing money and the cost of attracting investors is reducing those companies and those corporates. So there are tangible benefits which the corporates are going to definitely go after. So this trend is not going to go away because it is having a financial impact. Second is those companies that comply with non-financial information reporting regimes definitely have a better brand equity and reputation in the marketplace. And third is that the perception develops in the capital markets, as a result of which the returns also improve as far as the share price of the corporate is concerned. So this is just an extract from one of the surveys of the India experience, early experience projected by one of the mutual funds. Now, coming to the expectations of the board and the audit committee on non-financial information reporting, and this extract comes out of the Institute's flyers on contemporary internal audit themes. So it talks about data privacy, security, business continuity, fraud, reputation, brand, regulatory compliance, outsourcing, ethics, culture, M&A, product innovation, employee relationships, access to finance, and economic uncertainty. So even if you were to use these components as NFIR components, will go a long way in expanding our universe of internal audit to provide a larger assurance to the board and to the audit committee. Now, since the subject, let's try to encapsulate the subject into scope and boundaries. That, what is the broad framework that we can look at while we talk of non-financial information reporting. So let's look at the definition first. What is non-financial information reporting? Non-financial information reporting comprises of all those activities that stakeholders believe generate, preserve, and erode value. It simply means this definition has been brought out by the Integrated Reporting Framework, which is a globally accepted, universally accepted best practices framework followed in a lot of regimes as far as non-financial information reporting is concerned, ESG is concerned, that any activity that generates or preserves value or erodes value for an organization can fall into the non-financial information framework. Now, let's look at the non-financial information report as per the integrated report and best practices model. So you will see the last line of components which comprises of employee related information, customer related information, supplier and vendor related information, business partner related information, local communities that are being impacted through the business activities of the organization, and if there are any other such components that could come into the framework of non-financial information reporting. So primarily we are talking about 6 baskets here. People also call it the manufacturing capital, human capital, intellectual capital, and there are various, the financial capital, there are various other names that can be attributed, but broadly speaking, these are the 6 buckets. So any organization that reports about the talent, people, employee bucket, there is a lot of statistics coming around that, and that can be audited and that can be reviewed and commented upon. Second is related to customers. Third is related to suppliers, business partners, communities, meaning environment related issues, and then any other issues. So these are the 6 baskets that we could generally cover. Now, how does this all link to our efforts in internal audit? Because this is largely in the business domain. And what is the global awakening happening that is pushing the audit fraternity, whether it is the statutory auditors or the internal auditors? I have tried to reduce this into a triage. Now, we all are familiar with the fraud triangle, where we talk of pressure, rationale, and opportunity as internal auditors. But what could be the fraud triangle as far as non-financial information reporting is concerned? So there is an element of pressure. In traditional balance sheet and income format, CFOs, CEOs present a rosy picture of financial statements. Likewise, companies who have borrowed money, who have taken private equity, who are going to be listed on the stock exchange, are continuously being chased, pursued, evaluated by green investors. There are a set of green investors clearly emerging on the global horizon and even in India, including mutual funds, who talk of green investments and who talk of investing only in those companies that comply with the ESG norms. So there is intense pressure on the board of directors. Second is there is a lot of shareholder activism that is happening. Third is negative media reports. So, any incident that happens that is disrupting the environment for any corporate would immediately, whether it is water pollution, air pollution, noise pollution, would immediately give a negative media publicity to the corporate that would damage the reputation and create immense pressure on the corporate for improving the performance. And third is climate lawsuits. In India itself, as far as the green tribunals are concerned, there is something like 2,000 active cases on corporates in India as far as pollution of the environment goes. And, it is going up to the highest level and impacting the profits and increasing the legal costs. So there is intense pressure that is building up on the board of directors, CEOs of the company, CFOs of the company, compliance officers to perform as far as climate related actions are concerned. Second is that since this is a relatively new area, the audit checks and balances don't exist in these areas. Virtually speaking, even there is no audit trail. As far as financial statements are concerned, the traditional financial reporting is concerned, it's a well-established domain and discipline, and where there are checks and balances and audit trails available in the ERP systems of the company up to the highest sign-off level. And there are layers of statutory audit, internal audit, compliance audit, risk-based audit, internal financial controls audit, systems audit. But as far as non-financial information reporting is concerned, the audit trails are very weak. Data is being generated at a local level, then it is being massaged, presented in reports, but there are no formal audit mechanisms, checks and balances as far as non-financial information reporting is concerned, and no established audit trails. So this gives an open opportunity for management teams to manipulate the data, and that is what is happening globally and perhaps to a certain extent in India also. That because there are zero audit trails, there is lot of and no audit, formal audit so far. There is an opportunity to greenwash and do a lot of fraudulent reporting as far as non-financial information is concerned. Since there is no universally acceptable standard, there is low regulatory oversight and independent audit focus. it's a territory open for being very, very vulnerable and manipulated, and corporates can take a easy way out. What's happening as a result of this is that there is a lot of inflated and misleading promises being made as far as products are concerned, that they are environmentally complying, etc. There is abusive marketing practices that are happening, especially use of children in advertisement campaigns and giving false promises about sustainable product benefits that are not proven, that are not tested. So all these unhealthy practices are actually coming out and impacting ultimately the consumers. So the internal auditor's risk assessment can be done on the lines of this famous triad, which is customized for non-financial information reporting. Now, there are various white papers that you could go and you can do a Google search on. There is one by TerraChoice, amazing detailed white paper in terms of non-financial information and what are the various frauds that are happening in terms of false promises, hidden trade-offs, without any validation, to present claims, give vague and irrelevant information about environment, about a lot of compliances, fibbing, worshipping false labels, etc. So for paucity of time, I'm not getting into all kinds of these schemes, etc. But you can Google out the TerraChoice 2010 white paper. And there are a lot of regulatory prescriptions in India also. As I mentioned that, there is now under the Consumer Protection Act, there are a lot of safeguards that are coming out and new regulatory guidelines being issued by the Indian regime as well. UK Competition and Markets Authority guidance is quite comprehensive and good, which auditors could refer as best practices model while they are developing internal audit checklists. Now let's look at the framework for internal audit activities as far as non-financial information reporting is concerned. There are 4 fundamental questions which the internal auditor should ask while designing this framework and developing the audit universe. That in an organization, what constitutes non-financial information reporting? Written information, corporate announcements, annual reports, websites, or verbal communication that is done by the management. So that should be defined, documented, as Nandaji alluded in his briefing, that whether the organization has got a policy or no on non-financial information reporting. Second is, are the non-financial information reporting disclosures subject to the same set of rigor and audit as financial reporting is concerned? Could be a question posed to the audit team, and then a set of framework could be devised. What assertions or claims are made by the management, and are there internal checks and balances around such disclosures, such as the maker-checker controls, audit trails, validation of output data, etc. What is the policy to identify a reporting problem, check, correct, and disclose? It's quite likely that if there is so much of information that is being published beyond the books of accounts, organization and corporates may go wrong. So is there a policy to quickly correct, give a rejoinder, make a correction, and then disclose the right facts? So what are the turnaround times for that could be part of the overall framework. Now, while designing the overall framework for internal audit around non-financial information reporting, the internal auditor could look at reliability, audit trails, completeness, consistency, comparability between years, between periods, benchmarking with competition. What are the various compliance with regulatory reporting guidelines, SEBI guidelines for listed entities, etc., Consumer Protection Act related issues and prescriptions, and then devise a checklist around it based on a risk assessment that can be done. Primarily, the internal audit approach can be bucketed into verifying the sources of information from where non-financial information is being generated, internal, external sources, from competition, regulatory, third-party certifications. Like you have a lot of quality certifications that organizations claim that they are certified on certain quality standards. So the internal auditor should verify whether those third-party certifications are bona fide, genuine, available. Then how the non-financial information is being produced, whether in the system, outside system, through a survey approach, what are the underlying reports, what are the automated and manual controls in the entire supply chain of information. And next is relating to the output and publishing of non-financial information, how it is going, in what all mediums it is going, through corporate announcements, through the website, through annual reports, investor reporting presentations, ESG credit rating, or any other type of announcement. So the internal auditor could look at the entire source, production, as well as the output universe while devising an approach for non-financial information reporting. From an analytics perspective and from a perspective of benchmarking with COSO, COSO has come out with a publication on non-financial information reporting, which again has given components around control environment, risk assessment, control activities, information communication and monitoring activities, bucketed into environment, social capital, human capital, business model and innovation, leadership and governance. So it can be used as a benchmark for the purpose of review, and look at the entire cycle of whether there are objectives set, and then again the objectives, identification and risks assessment to be done, relevant controls should be selected and then evaluated for effectiveness. Now we'll come to the illustrative examples coming out of my past experience on review of non-financial information. So just about 7-8 examples I'll quickly go through. A few examples here pertain to corporate social responsibility disclosures made by the companies, as well as programs that are initiated by the companies to help uplift the society. So the first example here is of a corporate that gave a lot of donations on the CSR side for upliftment of livelihoods of the poorest of poor in a state in India. And after having given the financial assistance and ran a program for over a year, wanted to do a check on the non-financial information disclosures, as well as the checks and balances. So we did a deep diving review around that, and what we found out was that the beneficiary data that was created for the program to target the poorest of poor and women-headed families, we found certain serious issues and deviations in that universe of data, where actually the assistance and the program that was targeted towards poor, but certain percentage didn't go to the poorest of poor. It actually went to affluent class of people. As a result of that, the entire program objectives got vitiated, so much so that their internal performance metrics also got vitiated in the bargain. So what was compared was the income profile in the villages and the rural heartland of the program, beneficiary data that the company had, and was actually thinking that the beneficiary data which they had and which was used in the program to target the poorest of poor was at par, was going on perfectly, until the internal audit exercise was done using analytics as the fundamental approach. Because as far as non-financial information reporting is concerned, internal auditors will deal with lot of data, humongous data. So it will be very difficult to apply the traditional approach of vouching and verification. So it is advisable that an analytics approach be created. So a simple test of income profiling of the entire beneficiaries in the village with the program targets was done to realize that where there was zero income or there was higher income as compared to the acceptable levels, and then the deviations and exceptions were found out. Also, a lot of corporates, in terms of their sustainability and ESG initiatives, are providing local community assistance in the form of poultry, in the form of cattle breeding, etc. So here again, in one of the instances where the rates of purchase of the cattle and the poultry were compared with the grade, because the poultry and the cattle also has got different grades. So and the rates are fixed as per the grades. So like just we do a procure to purchase audit and we do a vendor rate comparison. So likewise, we did a rate comparison on various types of breeds that were available in the cattle universe, and we found out deviations and a financial benefit accrued to the client on account of that. Next is, again, this is something which, on the people side, on the employee side, this even in traditional internal audit can be picked up, was relating to a specific compliance guideline which the company or the corporate was supposed to publish in the annual disclosures as far as overtime is concerned. Being a healthcare company having a lot of clinics and hospitals, they have to comply with certain mandatory overtime related issues as far as their staff is concerned. And if the overtime and the shift limits are breached, then they don't comply with regulatory prescriptions, and where there are fines and penalties described. So this non-financial information was compared through use of computer-assisted auditing technique, and a check was done in terms of continuous shifts that were being done by the healthcare workers to unearth and identify a trend where there was a continuous breach of the overtime guidelines of the company, resulting into breach of compliances. Next is again on the CSR initiative of a corporate on open defecation free zones, where the corporate was supporting the program along with local authorities on developing toilets to ensure that they become defecation free, open defecation free, and there were thousands and thousands of toilets that were being targeted to be constructed, to be delivered, etc. So post the first phase of construction and delivery under the sustainable audit program of the corporate, lot of data was analyzed, and even physical visits were done, and red flags emerged on non-implementation of program in various hamlets. Also revenue generation from the hamlets vis-a-vis the contractor bills. Under this program, there's a specific, any such large sustainable programs that the corporates take always have a strategy that the local village or hamlet should participate in the implementation cost of the program so that the usage of the toilet takes place. It should not happen that, toilets get constructed and they are never used because people have not, there is no skin in the game. So there is an initial amount of deposit which is taken from the villagers, etc. So that data analysis was compared to find out, what kind of corruption practices existed at the ground level, and the construction certificates and the go live on the programs were compared, etc., to find out a lot of deviations and exceptions. So the internal auditor, as far as NFIR is concerned, should have a very, very specific analytics program and approach around sources of information, production, and the final output that is being generated from the program in all these three components to deep dive, because these programs are massive. So like in one of the cases, there were like 10,000 cataract surgeries that were conducted over a period of 30 to 40 days. So it would be very difficult for the internal auditor to then go back in time and check all the sources of information unless and until there is a digital audit program that is designed and that is implemented on a real-time basis once the program is gone live, and so that there can be simultaneous reporting that can take place. So the fifth year is on the agri side, on the orchid program, where saplings were distributed to households who actually do not possess land or a piece of land. So here the target audience was actually those small scale farmers and households who want to create livelihoods through orchid implementation and generate agri output around orchid programs. But unfortunately, in this case, what was found out by the internal audit team was that those saplings were distributed to such families who didn't possess any land. So it was given free of cost and then resold. So actually, the targeted beneficiaries never got benefited out of the program. So there are various types of testings also that were conducted, like water testing, post-implementation of water program around this entire agri initiative. So component-wise, it was broken up into various series of analysis and surveys that needed to be done, and then corroboration of data to reach the final internal audit output. Next is a case of missing ATMs for the financial services sector. So here, this example pertains to the ATM statistics that are being published by a very large bank and financial services player across the country. Now, these ATMs statistics generally get certified also to regulators. They get published, in lot of internal reviews, as well as lot of geographical segmentation data that banks generally provide. So in this case, what was done was, the entire set of information, which is again a non-financial information, was reviewed through analytics as well as through physical verification exercises. And what was discovered that few ATMs itself were missing, although the rent was being paid for those ATMs. The original location of the ATM was shifted, and so forth. So there were a lot of discrepancies that came out in this entire exercise. So likewise, these are some more examples. I will quickly conclude and leave some time for question and answer. I was given 45 to 50 minutes. I think I'm close to exhausting that. So I will just conclude with this final slide and leave some time for Q&A if that is required or possible, or we'll conclude the session. The critical success factors as far as creating an internal audit approach for non-financial information reporting is, first and foremost, is to build a framework around the entire subject of non-financial information reporting. Like as far as internal audit activities go of the books of accounts, and as far as financial statements are concerned, we are very well versed in doing that, because historically chartered accountants are very strong as far as financial statements, accounting and bookkeeping is concerned. But non-financial information reporting goes beyond the balance sheets and the books of accounts. It gets into the heart of business activities, heart of sustainable activities. So building a universe and building an auditable database and then doing it on a year-on-year basis is very important for the internal auditor. So a policy approach and a SOP approach should be developed by the internal auditor in consultation with the audit committee, the stakeholders and the board of directors, that what would be their expectations, what is the capability profile of the audit team, what is the team size, etc. This also represents a very large opportunity for internal audit fraternity to broad base their scope of work and enhance their revenue pies with the corporates that they are working, to create a new framework on non-financial information related internal auditing. Second is, since the universe of non-financial information is very, very large, just like in financial reporting, in non-financial reporting also we can take a materiality or approach of significance. So wherever there are material information segments around employees, around customers, local community, CSR initiatives of the organization, around the intellectual capital, IPR, innovation, whatever is coming within the framework of non-financial information reporting, what are the material disclosures which the management desires to make over the current period and the future period. The internal auditor can assess that materiality and develop a response as far as internal audit is concerned. Otherwise, quite likely that the internal auditor will get lost in the huge universe of non-financial information reporting. Third is to develop cross-functional teams and approach. It will be impossible for internal auditor to do this kind of a review without expanding his or her team capabilities. For example, if you want to do a non-financial information reporting as far as the healthcare sustainability initiatives of an organization is concerned, perhaps you may need expertise in healthcare. You may need to consult certain domain experts or subject matter experts in agriculture, in environment-related issues, pollution-related issues, health-related issues, education-related issues. So we should be open to creating cross-functional teams and borrowing that talent from the company itself, because the company will definitely have subject matter experts who can come in as guest auditors as part of the internal audit team, which will be very important to create the credibility, because the internal auditor may not have insights. So subject matter experts can be borrowed as guest auditors into the team. Third is using data analysis. As I have been mentioning time and again, the universe of non-financial information reporting is very large. So we cannot have the vouching approach, the traditional tick in the box approach. We'll have to do validations, comparisons. We'll have to do a lot of analytics around it. So better to use certain tools, certain softwares that are customized, and then you can build on them. Third is leverage on the existing risk and controls. We already have a risk and control framework developed for the organization. You need to just expand to include the green controls now, to identify those risk factors that are actually could cause harm to the organization or damage to the organization as far as their non-financial information reporting is concerned. That can be expanded in a component manner and identify the green controls around them and start commenting on them. Over a period of time, your risk and control matrices will mature. Third is develop a culture of data accountability. Take the lead of advocacy with your clients, with the auditee organizations, and make them aware that any incorrect data, inconsistent data as far as non-financial information reporting is concerned can lead to fines and penalties. And fines and penalties are huge. Like if somebody makes a false promise, the board members can face 5 years of imprisonment if it is proved in the court of law. Or a responsible authority can be fined up to 50 lakh rupees. So, the fines and penalties are huge in this area, and that advocacy can be done by the internal audit team to create a data accountability culture in the organization. So these would be the critical success factors as far as non-financial information reporting is concerned. With this, I conclude my session and I thank everybody for the patient hearing. And if there are any questions that I need to take, I will take them, or I will rest my case.
Thank you so much. We can take a question and answer session. And I'm audible or visible? Actually, there is a raining outside and a thunderstorm is there. So I think my picture is not visible, I think.
Yeah.
Hello.
Picture is not visible, but we can hear you, Kuldeep.
Okay, please, we have to be. Okay. So thank you very much, Josefa ji, for giving wonderful information. You very well explained through the importance of non-financial information reporting. It's very much true that the audit trails are very weak in non-financial information reporting. So really, we have to work on that. So thank you so much. Thank you, Josefa ji, for giving us a precious time. So thanks a lot, sir. Thanks a lot. Now we'll move forward to our second session, that is modern topics and trends for internal audit. This session would be taken by CA Ankur Satish Gupta ji, the speaker of this session. Ankur ji is a qualified chartered accountant with more than 10 years of experience in internal audits, risk assessment, process improvement, internal control evaluation, SOX readiness, and preparation of standard operation practices. He has around 3 years of experience in the internal audit team of one of the largest cement manufacturing companies in India. He has been part of developing standard operating practices for more than 10 companies from different sectors. He has significant exposure in handling internal financial controls review at major manufacturing clients in line with requirement of the Companies Act 2013. Ankur ji has significant experience in providing process improvement and internal control evaluation services to various sectors such as FMCG, pharma, cement, consumer electronics, energy and resources, and textile, among others. He has been part of international assignments in USA, Singapore, Hong Kong, Malaysia, Indonesia, and Egypt. Very good, sir. So now I would like to invite CA Ankur ji to start with this session. Ankur ji, now the dice is yours.
Thank you. Thank you so much, Kuldeep ji. I'll just share my screen. Yeah. Is my screen visible?
Yeah.
Okay. Okay. Thank you, everyone. And good evening to all the members on this call. Before I start off, I would like to really thank the Internal Audit Standard Board for organizing this and the Himachal Pradesh branch for hosting this session. Always great to have opportunity to speak for any topic related to internal audit, because that is something which is very, very close to my heart. Would also like to thank Nanda ji for always giving us this opportunity. Navneet ji, Kuldeep ji. It's wonderful that we have such sessions on internal audit with such great speakers. Also a great honor to speak after Josefa sir. Always nice to listen to him, and I think a lot of thoughts that he has given will be very beneficial to all the listeners. I think there will always be a lot of overlap in terms of what I speak and what has already been spoken. Because the way internal audit is progressing, we are seeing a lot of change in the business community, in the way people are looking at internal audit. From a chartered accountant standpoint, I think it's great, because this is a new area which is opening up significantly for us to have more opportunities. And I would say the requirement of internal audit is increasing day by day, where we are seeing right from the top corporates for expanding the span of internal audit to the mid-sized firms and the proprietorship firms also looking at having internal auditors in place to ensure that checks and balances are in place. So the topic that I've taken today is modern topics and trends for internal audit. I would like to, so the way I'm looking at this session is I would like to speak about, what are the modern trends which are coming out of internal audit. This is more around, some of these trends are more like global trends, and also some of the trends which we are seeing, in the Indian corporates, and maybe not now, but a few years from now, we'll see that these trends would sort of pick up, and internal audit will play a significant role in these areas. So before I start off, always one of the nice sort of cartoons that I have, that as an auditor we are always sort of expected to go deep into the things and review all the financial statements. There's a fear around internal auditor. But then if you also see, there are times where as internal auditors we end up auditing the accounts of the company, in the books, the business, and we don't find anything. And that is where, as an auditor, it becomes sort of a challenge, because you always feel that, if you have done an internal audit and you have not found anything, is that good or is that bad? Because, in a way it's good. That means the control and the processes in the company are working great. But then that always makes you suspicious as well, because how can it be that having done the audit, you have not found anything? Which brings me to the second thought, that today, if you look at it, there's a lot of pressure on internal auditors. The management, the promoters, everybody who is deploying internal auditors, they are looking for a lot of value add. And this is sort of becoming a challenge for us, because what happens is there's not necessarily every time that you can give value add in terms of money or in terms of cost saving or in terms of revenue increase or stuff like that. And that is where you would probably want to look at different aspects while doing value add. And that is where, this sort of cartoon which I have, that the auditor, when challenged that there's no value add in your report, just sort of prints the audit report with a dollar sign saying that I hope it's a value add now. So if you look at internal audit's definition also from an institute standpoint, it says that internal audit provides independent assurance on the effectiveness of internal controls, risk management processes to enhance governance and achieve organizational objectives. So achieving the organizational objectives is one of the critical aspects as far as internal audit is concerned. Finally, what is expected out of internal audit is that there should be a governance mechanism which should be of the highest standard in the company, and the objectives of the company are taken care of. The management is able to achieve the organizational objectives. So this is the core definition of internal audit, if you look at it, and this is where the complete I would say span of internal audit is. So I'll speak today about the evolution of internal audit. What are the core objectives of IA? How do we move up the maturity curve, the value addition of IA, and the new focus areas for internal audit? And then I'll just summarize the whole presentation in one slide. So if you look at internal audit, this slide talks about how internal audit has grown, or the role has changed in the last 6 decades. Initially in the 1950s, when the internal audit sort of was in the initial areas, the internal audit role was dealing with primarily accounting matters, to see that it's like a support to the external audit function, and we just supported the accounting matters. That is when the second part came in, where internal audit started getting involved in the accounting as well as the operations part of the things. 1970s was when the breakthrough came in viewing internal audit as consisting simply of operations. People looked at internal audit as the operations part of the internal audit. Then 1980s, 1990s, the sort of the ethics and the corporate governance came in. 2000 was a big decade where the shift towards corporate governance happened, with the new Companies Act coming in globally, the SOX and other things getting more strict, and the requirement of internal audit getting more and more important in the companies. We saw the shift towards corporate governance. The boards, the audit committees also started looking at internal audit as a very important function to maintain a corporate governance of the company. Which brings us to the next decade, that is 2020. That what will be the year 2020? I look at this decade as the decade where internal audit will evolve from a role of corporate governance to a much larger role, where internal audit will be looked at function which will also maintain the corporate governance, but will also be a function which will handhold the business to ensure that all risk of the companies are taken care of as much as possible. This is the role that I see internal audit playing in the next decade. And that what brings me to the core objectives during internal audit reviews. If someone says that what are the core objectives of internal audit reviews, the number one is compliance to company philosophy. Each company has a philosophy, has a policy, has a way of working, and that is the number one objective of internal audit, to see that the organizational objectives are being made, the company philosophy is being followed. Then comes the different aspects like comparison with leading industry practice. This is very important at this time. When an organization is appointing internal auditor and an internal audit firm, they expect us to give them some comparison with leading industry practice. If you're auditing a textile company, they would expect you to bring on some industry practice from another textile company to say that, hey, you're not doing this, and this is what we expect you to do because the other companies are following these processes. That is something which is being expected out of internal audit now. Obviously, identification of possible cost leakage is always there. They're always, whenever we are appointed, the promoters or the board expects us to come up with certain cost leakages. And that is where, it's important, because also for every time, during renewal, and we saw that cartoon earlier where we said that, the person was saying that I don't see much value add in your IA report. That value add will only come in from a cost leakage standpoint. If you're able to identify those possible cost leakages, focus on fraud is very important, because nowadays we all know the fraud compliances which will come up in the new Companies Act, the reporting of fraud, and that is where internal audit can play a significant role to be the eyes and ears of the management to see that the fraud and business process risk are taken care of. Enhancement of operational controls, assurance on control designs, approach for control validation, process improvements. These are obviously the core objectives which should always remain for internal audit. So whenever we do an internal audit, it is very important to have this, few objectives in our mind, because our IA report, when it comes out, even a good IA report, if it is missing on few of these objectives, somewhere we would end up missing out something. It's not possible to, have a IA report which has all these objectives being met, but primarily and largely the management or the promoters would expect us to have touched upon all these objectives. So if a report has observations on cost leakages, we have compliance issues, we have fraud risk issues, we have issues around process improvement, that is what will really, really impress and make a case for internal audit in the company, because then the promoters or the board start seeing internal audit as someone who's really giving a value add across the value chain of the business. So these were some of the core objectives during internal audit reviews, which I wanted to highlight before we sort of start off. Now, having spoken about the core objectives of internal audit, I would like to talk about how internal audit is moving. How the internal audit span is moving, how the what changes are coming into internal audit. And this is a table which I prepared saying that, what is the expectations out of a basic IA function and a IA function of the future. What is the difference, when we talk about a IA function, which is very basic, very traditional, and we talk about IA function, which is the function of the future, which is advanced internal audit. Number one is the key objective. In a basic IA function, the key objective would be compliance to policies and SOPs. The auditor would go, he would take all SOPs, policies which are there in the company and see whether those are being complied or not. Whereas the IA of the future, he would look at assurance as well as value addition. And that brings me to that point of identifying areas of loss leakages, industry practices, process improvements. That is the value addition that bring to the table. And the way I usually look at it, whenever I see any internal audit report or I'm reviewing an internal audit report, I usually bifurcate all my observations into these two aspects. What are my core assurance points, where I'm giving points related to compliance to policies, SOPs, and stuff like that? And what are my points which are related to value addition to the company? It is very important to bifurcate into two, because any report which is more tilted towards one, can be a little risky. So you should ensure that you have good value addition points also in the IA report, and that should be a focus area when the team also goes for internal audit. From a functional leader standpoint, earlier, we used to call it head of internal audit. Now you see most of the internal audit heads, they are CXO level people, usually called chief audit executives, sort of, who are usually reporting directly to the audit committee, instead of earlier days when they used to report to maybe the CFO or the MD. Now, to maintain that independence, they are sort of, reporting to the board or audit committee or directly to the AC. In terms of the role, earlier it was more like fault finding. Now it has become a consultant to the management. The methodology, that is changing a lot. Earlier it was more a checklist driven audit. You would get a checklist, the internal audit would go, sort of tick mark on those checklists, enter the amounts, and done. Now it's a risk based approach. What can go wrong? And that is the question which we need to ask whenever we are doing internal audit of any process, that what can go wrong in these processes, and then take a risk based approach. That is the new era of internal audit. In terms of fraud coverage, earlier it was more reactive. Once a fraud would happen, people would find, okay, a fraud has happened. Where's the internal audit team? They would report it to the internal audit team. They would go do an audit and then sort of, do a whole synopsis of what happened. Now it's internal audit is expected to be more proactive. Can we, in our internal audit reports, preempt frauds and say that, hey, these are the 5 areas which are vulnerable to frauds, and the processes are not in place. So that's the proactive approach which companies are expecting us to do. In terms of frequency, earlier it was more like periodic intervals. Now continuous monitoring is happening through analytics, through other things. Delivery model, obviously now a lot of work is happening offshore, and this has obviously changed with COVID. And people have realized that it is not necessarily that everything has to be site audits, and that is where you see a lot of offshore audits happening. In the earlier session, we were listening about working with other teams and subject matter experts. So that is something which is changing a lot. Like in my team, I have people who are engineers, who are IT experts, who are lawyers, and combination of people. Because what is happening is in a lot of areas you need those specialists. If I'm doing a project audit from a chartered accountant standpoint, yes, I can do a complete audit, commercial audit, everything. But if I have to do a quality check and a strength check, or whether the IS standards are being met, or the cube testing is there or not, and stuff like that, you need a civil engineer team. And that is where the subject matter expert piece is coming in, that now you're seeing more and more subject matter experts joining the internal audit team, which is actually a great approach, because that is how you're able to give a holistic internal audit report to the management. So these were some of the points which I wanted to highlight as far as moving up the maturity curve is concerned from an internal audit standpoint. We have already spoken about what do stakeholders expect from internal audit. This slide sort of talks about, what are the different stakeholders, and internal audit is such a function which has multiple stakeholders. Process owners are a stakeholder for us. The C-suite is HODs, CFOs, COs, MDs. They are for us as stakeholders. Audit committee and the board is obviously the biggest stakeholders for us, and also the statutory auditor. They also rely upon us from our audit report. They take a lot of confidence in doing their statutory audit. So we have a lot of stakeholders, and the challenge for internal audit is that each stakeholder, even though our work is to simply do an internal audit, each stakeholder has different expectations from us. And that is where the challenge lies for internal audit, where maybe the process owners, they look at us to give them genuine observation, practical suggestions. They also, a lot of times expect us to appreciate them for the good work done. I see this commented a lot of times in the closing meetings, that people say that you're only pointing out observations, but what about the good things that we have done? Why don't you put that also in the report? So process owners have a complete different expectations. The HOD, CFOs, and the C-suite obviously expect us to bring value addition, to summarize and do a fair presentation, to do root cause analysis. And the most important thing is process owners' expectation implementation status. See, finally, whatever internal audit report that you bring in, if it's not accepted by the process owner and your recommendations are not being implemented on site, then what's the point of the internal audit? And that is the expectations that the C-suite has, that, okay, fine, if you have come up with a good audit observations, that's great, but it should be accepted by the process owners, and the action should be implemented. From the audit committee standpoint, they obviously expect us to do an overall coverage and risk assessment, highlight the key issues, and do an overall assurance on the control environment which the company has. So the board obviously has a very different perspective to it. Statutory auditor sort of has a similar expectations like the board has, to ensure that the overall coverage is there. But obviously they would expect us to look into the statutory non-compliances, and also a bit of comfort, which would help them make a process assessment and save their time. If we have done our job right, obviously the statutory auditor, for him, it becomes a little easier to do his reporting. In terms of internal audit, apart from IA, and I'll speak about the global modern trends of internal audit, but what are the other frameworks being worked upon internal audit? What can internal audit team do apart from only internal audit? And these are primarily largely four things which internal audit today is getting involved in. The number one is internal financial controls. We all know that in the Companies Act, internal financial controls got mandated. And that is where I think IA is the best positioned department or team to take that up in the company, to ensure that IFC in place, the risk and controls metrics are made, there is policies and procedure to ensure efficient conduct of business. People are aware of IFC reporting is happening, statutory auditor is taking comfort from the IFC, which is being done by the management. So IA is best positioned to do IFC in the company. The next concept, which is taking a lot of prominence now, is ERM, so enterprise risk management, and it's also part of the new Companies Act that the board has to look at the risk management system in the company, and there's a risk management committee also which needs to be framed for the listed entities. So ERM again is a very important aspect where IA is well positioned, because finally ERM is the risk to the company, the business of the company, the existence of the company, the external and internal risk which can affect the operations of the company. While doing the IA, we are more looking at the financial and operational aspects, but the ERM, that is something which looks at the entity level risk to the company. The geopolitical risk. Are we is the company more focused only on one geography? Is the company has a risk of being dependent on one or two customers? Is the company doing business in a in a product which is going to be extinct and something else will take over that product? So these kind of risks which can affect the business at large, those are part of enterprise risk management. So IA can play a huge role as far as ERM is concerned, in both identifying such risk and then monitoring the risk and also reporting to the board. FRM, I already spoke about internal audit role as far as FRM is concerned. So preventing and detecting the faults and also creating the control environment. And lastly, legal compliance framework. So there's expectation from the board also and from the CFO and MD to give a certification on the compliance framework of the company. Which is where it is important that the company has a good legal compliance framework. There are also very good tools in the market now for large corporates which can manage the legal compliance framework. But even though it is from a tool or it is being manually done, to maintain the legal compliance framework in the company, there have to be adequate responsibilities and authorities tagged, and monitoring of compliance data is very important. And that is where internal audit plays a large role. So tomorrow, if as an internal auditor, you're working in a corporate or you're giving service to a corporate and your scope is restricted to internal audit, these are some of the frameworks which you can suggest to the management that which can also increase the span of internal audit. If the company you're working for does not have a IFC framework, that's the first aspect that you look at. That tell them that okay, fine, we need to get an IFC framework in place. You can talk about ERM with them. You can talk about fraud risk management, legal compliance. So these are some of the frameworks which internal audit is well positioned due to the knowledge that IA has to work with the management to ensure that these are in place. So what are the new areas of focus for internal audit? Now, this is a very wide topic in terms of what are some of the new areas which internal auditors are focusing on right now. This is both globally and within India in large corporates. I have picked some 7-8 topics which are the areas of focus for internal audits in today's time. The first one very important is ESG, environmental, social, and governance. So ESG, as we all know, or we must have read about, is gaining a lot of importance, especially for the listed entities. There's an expectation, though it is yet to arrive in some of the countries and yet to be mandated. But then if you see large companies, the Tata, the Reliance, the Adanis, most of them are giving ESG reports as part of their annual report, and they are separately also giving sustainability reports, because there is a lot of emphasis being placed on ESG right now. Also, globally, ESG is mandated if you want some sort of global funding, raising any sort of global funding. So that is why ESG is one of the critical aspects as far as most of the companies are concerned. IA can play a role in that to sort of ensure that, what are the current ESG disclosure process for internal controls, to initiate trainings in the company, to sort of be the function which sort of drives the ESG function within the company itself. So ESG is one area where internal audit can play a large role. The second one, which is again very important, is cybersecurity. Now, cybersecurity is a large area. Today, if you look at any businesses, most of the businesses are now technology dependent. It can be dependent on ERP, it can be dependent on cloud, it can be dependent on the internal systems in place. But all companies are today dependent on IT and on cyber, and that is where it's a critical risk for the business. I've seen most of the IA plans don't have cybersecurity or IT in place. Now, it can be possible that as internal auditors, we might not be trained to do that sort of cyber audit, but then you can always highlight that as a risk and keep that in the IA plan, and maybe take help of external resources to do some sort of cyber audit when you do audit of any company. This also sort of expands the span of internal audit and most of the times, cybersecurity is one area where there are a lot of lapses which you will find. And these can be large lapses. I've seen in my clients, a lot of clients have cybersecurity issues, and we highlight them. Then those are areas which are taken very seriously by the management. So cybersecurity is one area which can be a huge area of focus, and it might not be a bad idea to train yourself also on some sort of cybersecurity areas. You might not become an expert in it, but carrying out a basic ITGC review can be done easily by anyone. So that is one area where you can upskill yourself and look at cybersecurity as one area. The second is third-party risk management. So, we all do P2P audits and vendor audits and stuff like that as far as our internal audit is concerned. But for large corporates, third-party risk management or TPRM is a huge area, because there are a lot of risks which are involved as far as third party is concerned. And companies expect us to check whether our business is dependent, their business is dependent on any sort of third party. Now imagine an example where so many companies, they outsource their payroll, and it's such a critical function. All the confidential data is there in payroll, and a lot of companies are outsourcing their payroll now. It's important to check what are the controls from a third party standpoint, because he's processing the payroll of the company. It might be a possibility that he also must be subcontracting that work. He does not have adequate controls in place. So are we looking at that? Are internal auditors involved in the vendor selection process to vet providers and also head off potential problems, for large contracts? Let's say a company is doing a capex, which is a large capex, and they are doing giving a contract, a large contract to the company. Is IA involved in that? Because if you bring out these problems in your IA reports, that is more like a reactive approach rather than a proactive approach. In one of our clients, what we did was, there was this large capex which was happening, and they gave the complete work to one vendor. And we did a deep dive of that vendor, and we saw that what are the financials of that vendor. We got those informations from MCA, and we checked what is the financial health of the vendor. And then we realized that this vendor is heavily debt ridden. He has a lot of debt on the books, and he does not have the cash flow to service the client for the next 2 or 3 years. Now that's a major risk for the company, because they're heavily dependent on that vendor. If that goes off, the capex and the capex plans completely go off. And this is something we highlighted the management, and they actually changed the order, and then they did a complete technical evaluation again and went for another vendor. So these kind of things are something which can be looked at from an internal audit standpoint. Mergers and acquisitions. So M&A is obviously a large play as far as the business environment today is concerned. A lot of deals are happening and stuff like that. Now, internal audit can play a role to help transactions succeed. When one company is taking over another company, there are always changes in different policies being followed, different SOPs being followed, and IA can sort of bridge that gap and make the deal smooth. Number one. Number two, IA can also do a sort of a due diligence in the target company. They might not look at the financial side so much as far as valuation and stuff like that are concerned, but sort of to do a health check audit in a target company to see that whether everything is in place, the financials and the operations are tallying with figures on ground and stuff like that. So IA can actually play a role in M&A as well, and we are seeing that a lot in today's time. Crisis management. So this is another phenomena where internal audit can play a lot of role. We also saw the crisis of pandemic, and internal audit can play a large role there, because IA knows about how to manage risk, number one. Number two, IA knows the complete length and breadth of the company. So any sort of crisis management in the company, internal audit is something which can play a role in the complete life cycle of the crisis, and also preparing the board, reporting the post crisis. ERM is something I just spoke about earlier. HSE, that is health, safety, and environment, again a very important topic, especially for corporates which are listed or which are in the public eye. There's a lot of focus on safety, on health, on environment right now, and in our IA reports or in our IA plans, number one, HSE should be part of the overall thing. We might not be experts in HSE, but then at least ensuring that the SOPs and the policies of the companies are in place. They are being followed on ground. Environment is a huge area, because now the government and all the state pollution control boards have become very strict, especially in industries like chemical and manufacturing and stuff like that. So very important. Hazardous waste, obviously, compliances are very strict and the penalties are huge. The plant can go for a shutdown for a long period in case of any non-compliances. So HSC as an area is a new focus areas for internal audit, and that is something which should always be as a part of the IA plans of the company to ensure that such risks are reported to the board, and any health and safety risk which is reported to the board, I think any board would take it seriously because this is something which is very important. The last point is on the automation part. Today a lot of companies are moving towards automation. People are deploying bots. People are relying on blockchain, ERPs, and stuff, and a lot of various technologies, which is great. But then with all these automation, risk of losing out on controls is pretty high, and it's very important from an internal audit standpoint to be involved in that automation journey. If your client or your company is involved in some sort of automation journey which is happening as far as I would say, for example, any bots are being deployed for AP, accounts payable cycle. You have done your complete internal audit and IFC framework and everything on the earlier manual controls. So it's important to be involved in that journey of automation being happen, so that you ensure that all the controls are in place as far as those automations are concerned. And it should not happen that later on we realize that some sort of big controls and checks and balances are missed while those automations were being deployed. So this is another area where internal audit can focus on. So these were the 8 areas which I picked up. There are a lot of other areas also which internal audit can focus on. Things like human capital and disaster recovery and stuff like that. But these are the 8 core areas from an Indian standpoint, which I think are very critical. I think from these, I think cyber is one area. Health and safety is another area which can be easily picked up by internal audit and should be a focus of area as far as internal audit is concerned. To summarize, I will just take a few minutes to summarize what we have spoken about and what is important for us as internal audit to adapt to the changing landscape. These are some 8 to 9 points which are very important for us to adapt to the changing landscape. The number one is develop and launch a brand identity. When I speak about brand identity, the internal audit should have its own brand, should have its own style. And we have to ensure that the board and the promoter look up to us. They look forward to our reports, that what is coming in the next audit report. That is how you launch your brand and your identity. Linking cyber activities to assurance. So as I spoke about, it's assurance plus value addition. We have to give some sort of value addition to the management. So linking that advisory services to the assurance services is very important. Third is providing cyber assurance services. So might not be mandatory, but then some sort of IT reviews, some sort of ITGC reviews, simple checks like whether the company has adequate backup and disaster recovery as far as cyber security is concerned, whether all data is kept confidential or not, whether employees are ensuring that none of the data of the company goes out of the company and stuff like that. Those basic IT controls can be checked by internal audit, if not the complete cyber audits. Auditing the end-to-end risk management function, reviewing the strategic planning process is also very important. Today a lot of audit is focused on the outcome and on the data, but then the strategic planning processes, like if you are doing a procurement audit or a P2P audit, are you only looking at procurement transactions, AP transactions, or you are also focusing on the procurement planning and the budgeting part of things? So that is also very important from an audit standpoint, that we look at those aspects, because if we can bring in an audit report that your planning itself or the strategy itself the company is following is somewhere incorrect, or the data which is being used by the company to make those strategies is incorrect, then that is a huge value add to the company. Adopt analytics is something we all know, and we have been speaking about it. I think in the earlier session also, analytics was touched upon. Very, very important at today's time. I think without analytics, the audit cannot happen. And it's also time that we upskill ourselves. I have seen a lot of my team members who are now from an analytics standpoint also upskilling themselves to learn tools like Tableau and Power BI and stuff, which are there in the market, to take themselves one step ahead from a basic MS Excel. And that is also something which is very important, that analytics, because the kind of data which is now, we all talk about big data. To audit that big data, we need that skill also. Contemporize internal audit reporting. I think IE reporting as a complete subject is a complete wide subject, and I have spoken about in other forums. I think it's important to make the IE reports also interesting. As I spoke about that different stakeholders have different expectations. Our IE report also can be a little customized to suit those expectations. If I'm reporting to the board, I might not go with the complete word report, which is very verbose, and I give them key points, PowerPoint presentations to sort of bring their focus. So IE reporting is very important, from a communication standpoint. The next, I spoke about IS skill and capabilities. So that is a continuous journey that we have to enhance the skill and capability and heighten the personal impact as far as the internal audit is concerned. So these were, to summarize, how do we adapt to the changing landscape? Just to as a final thought, what I'd like to say is that today internal audit, I see it as a huge area for practicing chartered accountants and also for chartered accountants which are there working as part of the internal audit function of a company. There's a huge opportunity which lies as far as internal audit is concerned. And what is important to heighten the span of internal audit and to look at internal audit differently is that we don't focus only on the assurance part or the vouching part or the financial part. We look at areas which are different from the vouching part. Just to give an example, if you're doing a human resource audit, not only look at what is the payroll controls, but look at what is the recruitment strategy of the company. How's the recruitment happening? How are the appraisals of the employee happening? What are the policies which the company does not have? And think if you can focus on those non-financial reporting aspects and bring that out in your internal audit reports, that is where the value addition part will come in your internal audit reports. So for any internal auditor, that I think is the modern, I would say, trend, that it's not only assurance, but it's value add. And those value adds can sort of come in if you look at some of the modern areas which I spoke about. So that was it from my end. Would again like to thank the IASB for this opportunity, and would be happy if there are any questions. I'm not sure if we have any questions, Kuldeep ji.
So any question that will be taken at the end. So thank you so much, Ankur ji, for imparting crucial information on modern trends for internal audit. For sustainability of profession, definitely we have to adapt modern techniques in framing our internal audit reports. So your session was very impressive, and thank you so much for giving a crucial information. Thank you, Gupta ji. So
Thank you, Kuldeep.
Thank you. So without taking much time, now we should move on to our third session. Our third session is on continuous internal audit and risk assessment. So we welcome CMA Rajesh Gupta ji. A warm welcome to CMA Rajesh Gupta ji. He's a learned speaker. So he will be taking session on continuous internal audit and risk assessment. CMA Rajesh Gupta ji is heading a team of group assurance and cost control investigations and information security monitoring in SR Group. Rajesh Gupta ji is a graduate of the University of Mumbai, and in addition to being associate member of Institute of Cost Accountants and Management, graduate from SP Jain Institute of Management and Research, Mumbai. He has post-qualification experience of 28 years in internal audit, commercial accounts, marketing, and has worked in various sectors such as steel, oil, EPC, power, shipping and ports, retail, etc. So now I would like to invite Rajesh Gupta ji to start with the session on continuous internal audit and risk assessment. See, Rajesh Gupta ji, now the virtual dice is yours.
Okay. Thank you, Mr. Kuldeep. Am I audible?
Yeah, definitely,
Okay.
sir.
Yeah, fine. Thank you, Mr. Kuldeep. So before I start sharing my slides, I just want to say basically what Mr. Ankur said. Internal audit is all about value addition. And for from internal auditor point of view, he has to think not only about audit, but he also should think about the strategy, how audit needs to be conducted. So taking it forward now, I mean, the topic which today I would like to present. Now the question is, all these topics irrespective of number of slides, etc. Even if um, even if people are able to get few points from my presentation, I think the purpose is served. So I'm not expecting too much of in short time you not be able to get a lot of concepts, etc. So I'm not going into deep. I'm just trying to get some framework so that the learning takes place. That's my sole objective. So now, basically, whether it is continuous audit or it is traditional audit or it is whatever type of audit we say, as Mr. Ankul said, the objective is value addition for all stakeholders. Yeah. So moving on to the presentation, basically, internal audit is a very wide subject. It's a wide subject because there are a lot of possibilities when you look at audit, when you look at business, when you look at systems, etc. So it's a very large topic. That is why I said that I will attempt that, some of the concepts are made clear so that people can gather something from my presentation. Otherwise, one can keep on speaking and speaking and, there is no end to it. Yeah. So, in brief, what is continuous internal audit? I think this is very important for people to understand. See, continuous doesn't mean that you do for all the function continuously, you cover everything 100%. Doesn't mean that. There could be a focus to continuous audit. Now, why management? What will be justification for continuous audit for management? Basically, management's point of view is that they are able to attack anything without delay and investigate and resolve. That's the objective which management has. And that's what the maximum value addition will come to. So the continuous audit will deliver this kind of requirement of management. Then, like all the time, we escalate the problem for what? For minimizing the losses. So if we are able to do it timely, which continuous audit will attempt, as we go forward, we'll understand how we can how we can attempt to implement continuous audit. So basically, its objective is to minimize losses. Similarly, its ability to quantify risk assessment, basically, if you have continuous audit, what is the relationship of risk assessment and continuous audit? Obviously, two are not separable. All the time, whatever activities you're doing, if you're evaluating those activities from risk perspective, then you can focus it very well. As I said, continuous audit does not mean that you will be able to do everything, all areas, and you'll be able to attempt 100% of assurance. It doesn't mean that, and it's not easy. It may be theoretical if we say that. Now, what kind of things we can attempt for whatever area management focuses, we can attempt 100% testing in continuous audit kind of scenario. We can have exception reports. We can schedule those exception reports in certain durations. That is what continuous audit is all about. If you have an audit plan and you're covering some function once a year or twice a year, where is the assurance? What about the rest of the time? Do you have any tool to find out whether the rest of the time things are working, not working? There are problems, not problems. You will do audit once a year. That may not fulfill the process. That is why continuous audit, where you take help of automation, obviously you have to take help of automation and attempt some part of exception reporting. That is better than your traditional audit plan kind of audit. Now, what does it for management? As we said, that management has ability to investigate and resolve without delay. It will deliver to management improvement in control and consistency across the enterprise. Now, this is very important, consistency across the enterprise. If we have few auditors in an audit department, we have an audit schedule, we have audit program, and we are executing it. It's no guarantee that such audits will improve the systems. Such audit will give you consistency across the organization. So when we say audit is only one part. Management will have to work with internal auditor in improving the automation as well, improving the processes in system as well. Otherwise, continuous audit does not fulfill any purpose. Now, if we have automation, if we have focus, if we does 100% testing, then obviously we are depending more on automation. We are depending more on technology for doing the audit, and our dependency on people definitely goes down, not only for management but also for internal auditor. I hope I've been able to make a point that what continuous audit is. So basically, continuous auditing and continuous monitoring are both essential. If you are not monitoring and if you're doing continuous audit, if you're not improving your technology, if you're not improving systems, processes, etc., then as I said, continuous audit may not serve much purpose. So what should management do? Management has to do continuous monitoring. And as part of transactions review, as part of continuous review, as with help of automation, management's task is to monitor the result. Management task is to improve on the activities, transactions, and events so that the systems and processes are improved. Now, for internal auditor, as I say that internal audit is nothing but management process. And the management process of an internal audit, it starts with planning, organizing, and coordinating and controlling. Whatever normal processes we have in management also are required by any internal auditor of any level to do it. He has to plan audit, he has to organize it, he has to control it, he has to implement it. These are the processes of internal audit. Now, if we were to implement continuous audit, then we will require improvement in all the processes. So, for example, I will not talk about everything here. I will talk about only planning. But today, maybe we are planning in Excel sheets. If there is a automated system where the certain criteria are defined, maybe from the system you are able to plan which is a critical area, what frequency you should be doing, what level of sample you should be taking. So every part of management needs to be integrated with continuous audit approach. You need to know how should you plan. You should know how you should organize if you're going for continuous audit. If you're not able to change your management style, you may not be able to get result of continuous audit. Your approach may remain transactional audit, but you may attempt continuous audit. So what can happen? See, here the assumption is, now when we are talking about continuous audit will definitely require some kind of investment from management perspective. Investment in technology, investment in people, when you say that some kind of technocrats, etc., will be required. As you're covering the entire, you require audit tools, etc. So, but in the long term, management will definitely get benefit of these processes. And what are those benefits? Why should I go for continuous audit and I should shift my focus? Because if I have continuous audit in critical areas, I can improve systems and procedures in a better way. I can identify my control weaknesses as and when I on a regular basis, not dependent on once a year or twice a year kind of audit. Now, similarly, I can find out cost reduction and leakages day to day. I can also, there is a chance of finding fraud. There's a chance, because all the time you may not be able to find fraud if there is any kind of manipulation or tampering documents, etc. But if there is a system, if anything gets reflected in system, that you are evaluating it on day-to-day basis, so you are able to find it. Similarly, if you have day-to-day monitoring, your authorization and approval system will not be post facto. It will be system dependent. The processes will improve. Similarly, you can identify risk and you can have a mitigation plan. More frequently, you can change the, see, you identify risk once a year and you mitigate once a year. Does not mean that, and the systems are changing. You need to have risk mitigation and identification on day-to-day basis. That is what continuous audit can attempt. Now, time lag and backlog in the system, if you have continuous audit, the management will definitely come to know what are the weaknesses of system on day-to-day basis, not dependent on internal audit report or any other audit once a year or 6 monthly or whatever. Once you come to know weaknesses frequently, obviously you will attack time lags and backlog in the system. So this is a case for management. This is the case for continuous audit focus. Now, so it's a large concept. I may not be able to touch upon everything about continuous audit, but what I want to say is that if organization does not grow in its management style, in risk assessment and control, and in performance management, and in other things which you see in this chart, then it's not possible for management to take benefit of continuous audit. Because you may have continuous audit, you may not be able to address the risk, you are not able to improve, you are not able to continuously monitor things, then how will you give assurance? How will you give continuous assurance and alerts? So it calls for a data warehouse where things are where you have exception reporting and timely reporting done from continuous audit, and then you have management attacking it, improving it. Based on that, management also defining key performance indicators for people to follow, and based on that you have key risk indicators. So everything is related to everything. And if we want benefit of the continuous audit, then we need to address not only transactions, but we also need to address policy, procedures, and more important, thinking of management, thinking of people towards compliance, towards system, towards consistency. Then only you can get benefit of continuous audit. So now just look at, I'm just very simple. I found this this depiction quite simple. So first thing it says, what are the steps we feel should happen? Supposing somebody wants to implement continuous auditing. The first thing is, it says establish priority area. As I said, everything is not possible. You cannot attempt all functions, all sub processes for continuous audit. Maybe the cost of doing auditing may be higher than the benefit if you attempt such a large kind of audit. You have to decide what are the areas, then you decide the rules, then you decide the process, you put the parameter, you start managing it, you start evaluating it, and you have a report. And then you work on a risk register. So it's all related. But important thing is, first point, you have to establish priority. You need to know where I need to work, where I want continuous audit. Now, there are certainly benefits of continuous auditing because the coverage is much more. Coverage is one more. The sample selected is probably in some of the areas which you select, you have 100% sample selection. So, for example, if we have, let's say, if we have continuous audit process, and if if supposing you are able to do it in accounts payable function, then what kind of things you can get details on a very frequent basis, maybe weekly basis or daily basis, and depending on what kind of program you have, what kind of schedule you have, what kind of uh, scripts you have for data analytics. But if you have information about number of invoices processed by users, then what happens? We know, is it too many or too less? Is it risky for one user to process so many? Then similarly, average number of days to process a payment, you have a percentage of late payment and percentage of adjustment entries. All these information, you are not only getting it on a weekly basis or whatever fortnightly basis, you are able to control. Supposing I find that number of invoice processed by each user, let's say at a very bill passing level is in some case more, then I need to balance it so that there is adequate focus on control, focus on verification. So this is just an example. It may not be something great, but I mean, just trying to say that how deep you can go in an area. When you do a regular audit, let's say of any area, it's possible that you do not have automation, you do not have data analytics, and you're not able to go in depth. And even if you go in depth, you are able to attack that area once a year. In case of continuous auditing, if you have certain areas selected, like in this case accounts payable, then I can address control probably as and when there is a deviation, and I can take the process to a very standard level. So what happens if we are able to implement, let's say, continuous audit in few areas, few selected areas, few important areas, few commercial areas which are important to management? Then what I am doing, I am improving my SAP and or accounting package or whatever you may say on regular basis, which doesn't happen in a non-traditional, non-continuous audit. Same thing is like, if I have continuous audit, I can analyze. You have seen all the parameters in accounts payable. I can analyze the reports which are generated, and MIS. I can create exception MIS, etc. on much more frequent basis. Similarly, if any asset is not getting utilized or if there is any waste, I may able to find out much frequently. And if I do all this, then I am ultimately very efficiently utilizing my working capital. And obviously ROI and etc. will improve. So the question is, the continuous audit leads you to improvement. It leads you to the continuous improvement. It leads you to important improvements, and it leads you to monitoring on day-to-day basis. So is it that if I implement continuous audit, I mean, that's it. I mean, it can address all the issues? No, it cannot address all the issues. Whatever we external part interface which we have in benchmarking the processes and cost and rate, making market inquiry or doing background check of vendors and employees, etc., and taking other confirmation from third party, that will all remain. So you will have to continue with continuous audit. You will have to continue to follow external verification, validation part, which you do it in regular audit. So why there should be continuous audit, for the management, for internal auditors? Now, internal audit services, there is a lot of expectations by board of directors, by audit committees, by external auditors, statutory auditors, and by management and all that. And they're all looking for assurance. Are they looking for assurance once a year on areas? They are looking for wastages and leakages, highlighting as and when it happens, and management correction as and when it happens, and improvement in process all the time. If you want to do that, then you will have to attempt continuous audit. The regular method of audit may not be able to address this. So internal audit, in the second point, is basically exercise and part of corporate governance. So continuous audit is nothing but addressing corporate governance. And the third thing is, with dynamic world, with so many changes in environment, government policies, internal policies of management, there's a continuous decision making or changes in management working. Now, it all requires correct decision making to be made. If you have continuous auditing, you have more information, you have got more exceptions, you have better understanding of which process will work, which processes will not work, with changes in management or the decision which is to be made. That is why the continuous audit becomes very important for management in today's world, in today's dynamic world. So what should happen? The continuous audit can be implemented on its own by internal auditors or by internal audit heads. No, I mean, obviously, unless and until you have ethical culture from top down, you have independent and supportive audit committees, you have company's culture overall for risk, and the quality of internal auditors. Here I have said the chief internal auditor, I mean entire team. They have to think. See, what is important is they have to think out of box. In continuous audit, the stress on internal audit team will be more because they are getting reports exceptions on a very frequent basis. So they need to take up with auditee on frequent basis. They need to monitor all the changes on frequent basis. So the load of internal audit and the expectation of internal audit will increase. So if internal audit team is not competent to handle, then the continuous audit may not work. So ultimately, the perspective is that operational efficiency and improvement focus has to be there by management. Then only the continuous audit can work. Now, just touching upon the risk assessment part. Now, as we see the risk assessment and continuous audit, both have same objective of continuous improvement and validation. However, in risk assessment, one has to be very careful about the external conditions. Internal part we know, policies, procedures, but external part also, supposing some policy has changed. Here, for example, it is given that if you do not comply with some statutory guidelines, your entire company may be in trouble. Or if you are not able to do proper hedging, your company may be in trouble. Similarly, if you do not balance your liquidities and liabilities, you may be in trouble. So the question is risk. Risk is more external factors are also involved in risk, which management has to take into consideration apart from the internal factors. Now, basically risk, when we talk about, it has uncertainty, it has risk hazard, it has uncertainty in terms of technology, in terms of price fluctuation, in terms of any event happening, flood, fire, etc. However, if we have continuous assessment, we will be able to do risk assessment in a better way. If we have continuous audit, still we will be, because a lot of information will be flowing in, and risk assessment can be done in a better way, more informed way. So what are we saying? We are saying risk management is a process of identifying and managing business risk. It is also realistic evaluation of risk and formulating strategy to deal with. And all this can happen once we have a continuous information, continuous upgradation of processes, then only we are able to do risk assessment in a better way, rather risk management in a better way. So normally what happens, like as I said, the continuous auditing and risk assessment are related. But normally, I'm not saying in all the companies or in all situations it's happening, but normally what happens? People don't implement risk management in a full way. The management tries informal way. Then the planning is not done. The risk mitigation is not done. Now, if you do all this, the culture is not proper to take up the risk assessment and mitigation part. So there is no shortcut to risk assessment. What I want to say, either you do it thoroughly, systematically, regularly, or you don't call it a risk assessment at all. Now, I'm not going into this normal thing. You can identify risk in a external and internal techniques. And now, what is important is that if you have continuous auditing and if you have proper risk assessment, then you should be able to address these 4 pockets. What I should avoid, what I should share with other agencies and with other people to mitigate, where I can reduce, and what I should accept. Supposing I find that certain thing, insuring certain assets, as a management, if I take a call that the premium part is much higher and I take a call of the risk, then I accept the risk. So continuous auditing and risk assessment will address mitigation part better, how we mitigate the risk. So when we say risk assessment, we said what is the likelihood and what is the impact. Now, I'm not going into the details of this, but what I want to say is if I have continuous audit, I have proper risk assessment, then I can define frequencies depending on the area in a better way, and I have a framework which will work. So for the risk mitigation, what is important? As I said, proper policy is very important, risk management policy, and there is no shortcut. It has to be proper assessment and mitigation. Of people for risk management has to be fixed. If it is not fixed, clear roles are not fixed, then the risk assessment and continuous auditing may not give so much of benefit. And improvement of processes and making a contingency plan is also very important for any risk mitigation to work. Now, reporting is as important as assessment. It has to be reported timely. It has to be, if you have continuous auditing, you may get more information, you have exceptions. And in combination with risk policy, you may be able to report to management timely. If you don't report timely, then the leakages and improvements will not happen. So coming to, as I said, the risk management and assurance function, internal audit functions have got interface. It has to be understood. The things which are simple are not understood most of the time, irrespective of the level. Not that is not understood at a lower level. So it's very good to talk about risk management and assurance, but it is important to understand why. So obviously risk management goes beyond your internal auditors. It goes to statutory auditors and quality auditors and all other external parties. If you don't address it, you get affected from external parties as well. Secondly, if you do not have proper risk assessment and continuous audit in a well-defined manner, your assurance or internal audit will be doing over audit or under audit, which will over and under both are not beneficial for us, for the organization, for the company, because it's not giving optimum result. It is not giving optimum result. Similarly, assurance function with performance of risk framework can only give proper continuous audit. And most important is the response of by appropriate control and risk statements has to be timely. And today the assurance which audit committee or the board, etc., look at is not the yearly kind of assurance. They're looking assurance in every meeting. If there are 10 meetings, in every 10 meetings, they're looking for it. So if the expectations of and management is improving and moreover, company law which you look at, or any law which you look at, the kind of expectations which are there for compliance and the wide coverage, it all requires information and continuous monitoring with flavor of risk assessment. So that's it from my side. I don't know whether, in limited time I could do justice or not, but I think even if people have picked a few points from a few point of focus for continuous auditing, I think my purpose is served. Thank you.
Thank you, Rajesh Gupta ji, for giving valuable information on continuous internal audit and risk assessment.
Yeah.
It's very true that continuous internal audit function, that is a very crucial function because it helps decision makers to protect organizational assets and reputations. So you have imparted a very good presentation on this topic. So thanks a lot for sparing time, sir, for this meeting. So I think Gyan Mishra ji, CA Gyan Mishra ji has joined today's meeting. So a very warm welcome to CA Gyan Chandra Mishra ji. CA Gyan ji is a Central Council member ICI and a Vice Chairman of Internal Audit Standard Boards of ICI. So I would like to invite Gyan Chandra Mishra ji on virtual dais for concluding remarks.
Thank you, Kuldeep ji, moderator of the session. Very respected Chief Charanjot Singh Nanda ji, respected Secretary of the important board of the Institute, IASB, Chairman of the Himachal Pradesh branch of NIRCFI, CI, Noni Sharma ji, Naveen Goyal ji, respected and distinguished Speaker Rajesh Gupta ji, and Absentia Unwala ji and Ankur Gupta ji, and all the respected participants of this very important webinar of the Institute. Good evening to all of you. Friends, one very important aspect the board is carrying, that is to provide the in-depth of the internal audit function of the profession. The global trends in internal audit, a look ahead, is a basically series of the IASB, which is going on, and a lot of topics of relevance are discussed on every Saturday from 6 to 9 p.m. I'm thankful to all the learned speakers who spared their valued time for this important webinar. Friends, we all know this is basically internal audit management function. And this is the endeavor of the internal auditors and, of course, the management as well, to have a good internal control system to adhere the maximum compliances and, of course, to give more productivity as well as enhanced profitability to the organization. Friends, I'm quite sure that all the speakers have deliberated at their length. I will not take much time. I just congratulate the branch, and I'm sure that each and every participant has some takeaway from today's session, and it will be applied for their professional practice as well as in the organizations where they are working. The topic, I was just listening a few minutes to Rajesh Gupta ji, risk, basically for any organization, and how to assess the risk by various tools, what may be the control measures for the risk, what may be the risk management system. All those things have been discussed in length. And I am once again thankful to the branch for giving this opportunity and platform to all of us to interact with the participants of the program. Thank you, one and all. Good evening, and we meet again in next session on next Saturday. Thank you.
Thank you so much, Gyanji, for joining us and sharing wonderful words. Thank you so much. Thank you.
Thanks.
So I think we should conclude the meeting.
Yes.
Yes. Okay. Thank you. Thanks a lot.